Good evening, ladies and gentlemen, and welcome to uh, yet one of our webinar series at Mercantile Barristers, strictly dedicated to professionals in the construction industry. You're most welcome, and the subject matter of our webinar this evening is final accounting, how to avoid common mistakes and contract disputes. Now, if you have not attended any of our webinars before, my name is Samuel Okoronkwo. I started my professional practice as a quantity surveyor before becoming a project manager and then a barrister. Now, I have to observe that we are using different systems for this webinar. Ordinarily, if you've attended our webinars, you will find that we would always use Zoom. But on this occasion, I've been informed by our clerking team that we have in excess of 850 people signed up to attend, and as such, rather, it exceeds the capacity of our Zoom system. Hence, we are on live broadcast. I say this only to observe that in the most unlikely event that we have a technical hitch here and there, I'm reliably informed there is a competent technical team to attend to it. Okay, so having put that out, just by way of introduction, as I say, currently I practice as a barrister, and as a barrister, I assist my clients with drafting construction contracts that achieve their objectives. I advise on how to manage out disputes in construction contracts. Of course, I assist primarily in resolving disputes in construction contracts. I, of course, adjudicate and I arbitrate construction disputes. And when we get to the end of the line, as it were, I litigate unresolved construction disputes in the courts. Now, with that introduction, I think I set the background in saying, as most of you who are attending, who are either employers, contractors, architects, quantity surveyors, engineers, project managers, and a varied list of consultants that practice in the construction industry, you will all be aware that construction disputes are caused in the main by disagreements regarding time, we have overrun on program, cost, we have exceeded the budget, and the quality of what's been built. Now, of these three key cardinal sins, as I call them in the construction industry, cost overruns is the biggest of all the culprits. Therefore, it follows that if you can eliminate, which is near enough impossible, if you can manage construction cost overruns, you will ultimately eliminate lots of disagreements, which then gravitates to disputes. So bearing that in mind, when you encounter construction difficulties, resolving disputes through adjudication, arbitration, or litigation is expensive. And that is a matter of fact. It is far more cost effective, therefore, for every prudent practitioner to endeavor to avoid those disputes going through formal resolution procedures. And that is, as I say, a necessary point of warning. So in this webinar, therefore, I'll be looking at ensuring that we gain a proper understanding of final accounts and what it actually entails, the mechanism for determining final accounts and therefore issuing the final certificate with specific reference to standard forms of contract, which is the most prevalent forms that are used. I would then look at the legal effect of a final certificate. I would then alight upon what the common mistakes that are made in the preparation of final accounts and then how to avoid them. I'll give some case examples and then, of course, I will take your questions and answers. Now, unfortunately, if we were on Zoom, I could see you and you could see me, but on this occasion, you can see me and I can see not you as it happens. So what is final accounting? Most of you will know what final accounting is. But when you sit back and look at it, you will agree that final accounting represents the consolidated financial summary, which is presented by the contractor to the employer after the completion of the works. It is supposed to demonstrate the total sum the contractor considers is due to it for the works that he has actually carried out. And this is as distinct from the works as they were set out in the original contract documentation. Very noteworthy that final accounts is very different to interim payments. The contractor would include or ought to include everything in the final accounts that represents the valid contractual claims for all the additional payments that it is seeking. Now, under some forms of contract, contractor's obligation is only to provide the necessary documentation, and it is up to the employer to determine what the figure will be. But I'll get to those in a minute. It is supposed to wrap up all that has gone on throughout the life of the construction project. Now, while it may be possible, as I've set it out there, for the parties to agree the final account, the process of trying to reach a final account, as I'm sure most of you with experience will be aware, is very complicated. It can be very time-consuming. It often becomes adversarial, and it leads to formal disputes. So it is absolutely necessary, it's an imperative that steps are taken to ensure that final accounts can be reached without disputes happening. So what does it entail? Now, it depends on the contract, what the form of contract states. However, generally, I say that the proper final account should include all the items that I've set out there. So the variations, the loss and expense that is due to the contractor due to the delay and disruption that is suffered in the course of doing the works. It should take any account of any liquidated damages, any provisional sums, any release of retentions, any prime cost sums that are to be adjusted, payments relating to the opening up and testing of any of the works that have been covered up, any fluctuations if your contract includes a fluctuation clause, and of course, any contra charges that might exist. Of course, contractors are very unwelcoming to contra charges, but nevertheless, it is a matter of fact sometimes that it's unavoidable. Forgive me. Now, what is the mechanism, therefore, for determining the final account? Now, the mechanism for determining the final account will always depend on the wording of the contract. Now, it differs across the various standard forms of contracts. Wording of the relevant clause will determine what the contractor has to show in order to establish his entitlement for the additional payment that he is seeking, as well as how it is calculated. Often, contractual terms impose conditions precedent for the contractor to have attained before he will have entitlement to claim specific sums of money. It's important, therefore, to pay good attention to the terms of the contract. So I make reference to standard forms, and of course, the most popular of them are the JCT contracts. And I have used, for the purposes of this discussion, mainly the JCT 2011 and the JCT 2016. Primarily, the final account provisions are summarized as follows. I've tried to pull them all together. It begins at clause 4.3. That clause lists the only situations in which the contract sum may be adjusted. So that is quite definitive. Now, these will include the grounds for an entitlement to loss and expense. Under JCT 2011, it's split into three clear categories, where contract sums may be adjusted, where there may be deductions, and where there may be additions. Now, in the JCT 2016, it contains a single simplified list. It doesn't go through breaking it down into those sections. Now, in clause 4.5.1 in the 2011 contract, which is mirrored in clause 4.25.1 in the 27 contracts. Now, not later than 6 months after the issue of the practical completion certificate, the contractor must provide the relevant person. In this case, it could be the architect, it could be the contract administrator, it could be the QS, with all of the documentation necessary for what will be the final adjustment of the contract sum. So the initial obligation is on the contractor within 6 months of the PC being issued to provide all the relevant information. Now, in the 2016 contract under clause 4253, it expressly provides that if the contractor fails to supply the information that is required within the timescale, then the architect has to give a 1 month's notice to the contractor of that failure. And after that notice is being served and the contractor continues to fail to serve the necessary information, then the contract administrator will then be able to complete the ascertainment of the loss and expense and the statement of adjustments to be made to the contract sum in order to result in the final account on the basis of the information that is to hand at that date. Now, it's very important. The time limitations are quite significant, as will become apparent afterwards. Okay. Now, in clause 452 in 2011 and 4252 of 2016, the contract administrator must then, within 3 months of receipt of the information, ascertain the loss and expense due under clause 4.23 or 421 in the 2016 contract. In addition, the QS must then prepare a statement of all adjustments to be made under clause 4.3. The architect or the contract administrator will then have to send this information to the contractor within that 3-month period. Very important. Now, under clause 4.15.1 in the 2011 and 426.1 in the 2016, the final certificate must then be issued by the architect or the contract administrator no later than 2 months after which of the following events that occurs last, the later or the latest of the 3 following events, is either the end of the rectification period, the date of the certificate of making good under clause 239, clause 2.39, or the date on which the architect and contract administrator sends the contractor copies of all the statements and the ascertainment prepared under the previous clauses that the information has been completed. Now, under clause 415.2 of 2011 and 426.2 of 2016, the final certificate can then be issued, which confirms the difference between the contract sum as now adjusted in the final accounts in accordance with clause 4.3, and the total of all the sums due in previous interim certificates. The difference between the cumulative of what's being paid and what is in the final certificate becomes the balancing payment, which very significantly can be due to or due from the contractor. So this will specify the relevant paying party. Now, those are in a rapid quickfire format what the JCT contracts provide. Now, if you look at the NEC contracts, now the NECs 4 and NEC 3, the final account process is referred to as the final assessment. The provisions in the NEC is far less detailed than there is in the JCT. In NEC 4 is clause 53.1, where the project manager has to carry out an assessment of the final amount due, and you then certify a final payment, provides the contractor with the information on how he has done the assessment, but this must be done no later than 4 weeks after the defect certificate has been issued or 13 weeks after a termination certificate. Now, the final payment is to be made within 3 weeks of the assessment, unless, of course, a different period is stated in the contract data. Now, in clause 53.2, if the project manager fails to carry out this assessment within the required timescale, the contractor may issue his own assessment, and that will fall for payment within 2 weeks, of course, provided the employer agrees with it, unless, of course, a different period is being set out in the contract data. Now, there is, of course, in clause 50.9 on cost-based contracts, where the main option really is option C to F. It's the finalization of the defined cost, which is the contractor's actual cost minus the disallowed costs. Now, rather interestingly, under NEC 3, there are no final account mechanisms provided at all. But what then happens that certain clients that choose to use NEC 3 will tend to draft their own final account mechanism and include that under the Z clauses. So those are the provisions in a nutshell of the standard contracts in JCT and NEC. But what is the legal effect of a final certificate once that has been issued? Now, the legal effect, the final certificate could amount to what the courts will perceive as conclusive evidence as to the matters contained and covered by it, subject only to a formal challenge within a prescribed time period. Now, in such a case, if no formal challenge follows within the prescribed time period, then the parties will be unable to reopen it and have it reconsidered. Now, depending on the wording of the particular contract, you will find that final certificate could become conclusive as to the payment, i.e., the amount that fell due under the contract, the quality of the work that has been executed under the contract, and what has happened with latent and patent defects in the contract, or a mixture of any of those three fundamental items. So once a final certificate has been issued, it has a significant legal effect that the parties should be mindful of. Now, in JCT contracts, I think this is captured in clause 1.9 in both the 2011 and 2016. Only with certain exceptions, the final certificate is prescribed to have an effect as conclusive evidence in the JCT contract insofar as the contract requires the quality of the materials and goods or the standard of workmanship to be subject to the architect's approval. Such quality or standard would be taken as having reached that reasonable satisfaction. The opportunity for the employer to bring claims for defective materials or goods or workmanship at a later date will therefore depend on how the contractor's obligation has been couched in the contract, i.e., whether or not they were supposed to be to the architect's approval. Now, the necessary adjustments to the contract sum have been made. The court would accept that once a final certificate has been issued, that those adjustments have been made, and that any extensions of time that fall under clause 2.28 have also been adequately addressed to the mutual satisfaction of the parties, and that the reimbursement of direct loss and expense agreed, ascertained, or valued under the contract is in full and final settlement of all the contractor's claims under the relevant event. So this is giving you an example, or in fact, a statement there illustrating that the JCT expects it to have that conclusive effect. Clause 1.9.2. Now, if adjudication, arbitration, or other proceedings are brought within 28 days of the issue of the final certificate, the binding effect of the final certificate in relation to the subject matter of the proceedings that have begun will become suspended. The suspension will end when the proceedings are concluded. Then the final certificate would then be subject to any adjustment depending on the judgment or settlement reached in those proceedings. Now, the same will be the position where the court or arbitration proceedings following an adjudicator's decision on a final account, provided the challenge comes within a 28-day time period, the final effect of that will be suspended. Now, under clause 1.9.3 of the 2016 contract, proceedings are deemed to have concluded where neither party has taken a step in those proceedings for a period of 12 months. It is not unusual that proceedings begin and then the parties, for one reason or another, lose interest or fail to have proper carriage of those proceedings, as one describes it in the legal field. In other words, proceeding with it duly and diligently. If it has been on ice for 12 months, then the JCT deems it to have ended by a fluxion of that time. clauses 1.9.2 to 1.9.4 of the 2011 contract takes a slightly different approach. It says that the final certificate is conclusive if proceedings are not brought within 28 days. So it's very important to be mindful when you're using either the 2011 or the 2016 contract. Now, the courts will, of course, are willing to enforce such conclusive timescales, but case law, as you will see, suggests that if you have a 28-day time limit, which is tight, you may actually be able to garner the sympathy of the court in trying to address any issues you might have. Now, what's the position under the NEC contracts? In NEC, remember NEC 3 has no provisions, so it's irrelevant now. In NEC 4, clause 53.3, the final assessment, which is what it's called, is conclusive evidence of the final amount due under or in connection with the contract, unless it is, of course, referred to as dispute resolution within the stated timescales. The assessment of the final amount is changed if the parties reach an agreement, an adjudication decision as to the final amount is not referred to the court or arbitration within a 4-week period, or a recommendation of the dispute avoidance board as to the final amount is not referred to court or arbitration or within 4 weeks. Clause 53.4, the revised assessment becomes conclusive of the final amount due in those circumstances. So that is final account. The legal effect of final certificate, which is issued after the final account's been calculated. But what are the common mistakes that are made, which we see in everyday practice and which ends up dragging the parties to reach the court? Now, the first mistake that most contractors and employers, and might I say the professional consultants make, is to leave the final account to the end of the contract. Now, if you leave the final account to the end of a contract, you're making a rod for your back. Now, final account should start at the commencement of the contract. Once you've begun the work, you've got the contract sum, it should be ongoing throughout the progress of the work, making sure that you're making the necessary adjustments to the contract sum regularly, making those, and also reporting it. So that if you're the contractor who stands to receive reimbursement for anything you consider to be extra cost, the earliest possible opportunity you have must be used to communicate it to the payer. If for anything, just to give that information, even if it is going to be disputed or rejected, but at least you have given that information. Don't leave final accounting to the very last. If you do, for whatever reason, then you're looking for trouble. So contractors often save up their claims to present it to the employer for resolution on completion. Now, if you have just entered a £1.5 million contract, and upon completion you present the employer with a £2.5 million bill, within reason, you ought to properly anticipate resistance. But if you've been warning the employer throughout the course of the contract that the costs are creeping up, now, if for nothing, there will be consciousness that will be developed in the mind of the employer, as well as the architect and the project manager, and indeed the QS, to begin to tighten variations, control costs more effectively. It will limit the employer's exposure, but it will also, to a large extent, go to securing what you, as the contractor, is likely to receive at the end. The final account will always give rise to a balancing payment to the contractor, I say, and I underline the word vice versa. The reason here is that when the figures are adjusted, it may well end up being, as you will see shortly, that the contractor is being asked to pay money to the employer, or the other way around. So if you keep up to date with progressively updating your final account throughout the life of the contract, it will become clear to you, as well as the employer, who is due to pay who what. Now, under the standard forms of contract, the final account includes the issue of the final certificate, which formally records what is due. It may also be conclusive of the matters as I have run through, and the employer and the contractor may well choose to do a deal. And of course, we will encounter the payment provisions under the Housing Grants, Construction and Regeneration Act. And sometimes you will see that it is difficult for an employer who has made payment without investigating the accuracy of the payment to recover. Okay, so let me move to some case examples quickly. The first one that I will highlight upon is the University of Brighton versus Dove House Interiors. Now, the parties in this case were unable to reach an agreement over the value of the final account and therefore the final certificate. The contract administrator proceeded to issue the final certificate starting the 28-day time clock for dispute resolution. The parties then, seeing how tight the 28 days would be to them, they agreed to increase the 28-day time period to 66 days to allow themselves longer time to negotiate. They hadn't reached an agreement on day 65. The contractor served a notice of adjudication, which was the first formal step in formal dispute resolution. But unfortunately, in this case, the contractor named the wrong nominating body. Therefore, the notice was technically invalid. So the notice had to be corrected and reissued in order for the adjudication to be valid. With all that happening, additional time was incurred. Of course, the employer held the position that no notice had been properly served within the limited time period, and as such, that the contractor couldn't bring proceedings. The court held that the adjudication had been commenced properly for the purposes of the conclusive evidence clause in the contract. This kept alive the contractor's right to challenge that certificate that the contract administrator had issued. So this is an example of where timescales and adherence to them can come to surprise one party or another. Okay. Now, I make a reference to a Scottish case in the East Ayrshire case, as it is called. The Court of Sessions in Scotland agreed with another English case, which is Mark Gilbert, as to the effect of the provisions of the final certificate in JCT 2011 for use in Scotland. In that case, the court held that the parties were not entitled to try to rely upon the conclusive nature of the final certificate to then obtain an interim payment whilst the proceedings to challenge the final certificate were already underway. Now, if the court, excuse me, now, if the court action is raised to challenge the sum due under the final certificate within the relevant time period, a party cannot then obtain payment of the disputed sum by commencing separate proceedings after the relevant time period and relying upon the conclusive effect of the final certificate in those proceedings to obtain payment pending the outcome of the original court action. Now, the court held that nothing in the contract indicated that the conclusivity provisions were intended to work this way. Therefore, the Scottish court upheld what the English court had already determined. So decisions indicate that the approach of the Scottish courts to the effect, the conclusive nature of the final certificate will largely follow the English authorities. In YJ Lovell, London, against Roswini Estates, the negotiation of the final account had proven to be protracted, but the parties eventually reached a compromise and signed a formal full and final settlement agreement. However, the employer then sought to argue that the contractor was nevertheless still obliged in that case to comply with a relevant clause for the provision of information in the contract, which required it to submit a final account document, and that the contractor's failure to do so meant that the employer need not pay the amount that they've set out in the settlement. So contractor and employer reach an agreement. employer changes his mind but realizes, oh, the contract strictly provided for the contractor to do certain things. He hasn't done it, and as such, I'm not going to pay. Now, so unsurprisingly, the court rejected this argument and held that the parties had intended the settlement agreement to displace the strict provisions in the contract. Court, however, recognized that in the absence of any express reference to those contractual clauses that were being displaced, it was more difficult to say whether the settlement agreement covered the claims for latent defects, which was, of course, what the employer was seeking to recover. So, to avoid subsequent uncertainty and possible challenge, parties should always, therefore, ensure that any settlement agreement is clear and unambiguous and covers all the issues that are intended to be covered by it. I have another case which is live, and of course, I'm not going to disclose the details of the parties, but it related to a student accommodation development, which in essence had been funded by investors doing a sale and lease back in this development. Now, the employer had sold off plan to the investors, and they exchanged contracts, and they were due to complete with the issuing of both the certificate of practical completion and the final certificate. So what happened in this case, which is still live, is that the architect proceeded to issue the relevant certificates with only no more than 3/4 of the building having been completed. Of course, the relevant banks released payments on the strength of the architect's certificate. The employer received all of the money, and of course, the employer promptly went insolvent as soon as they've received the money. Now, the issue then that arose was that the investors, who I am advising, turned around to seek remedy. Of course, it's difficult to seek remedy from an employer that has become insolvent. And the person who's now left in that case holding the baby is the architect, who has become exposed to the attack of negligent certification at considerable expense to his professional indemnity insurance, not to mention the attack on his professional standing and disciplinary proceedings by the Institute. One to note. Now, of course, there are payment provisions that the Housing Grants, Construction and Regeneration Act of 1996 has imbued into contracts. So, how that impacts the certificates, I'll make the following comments. So, where the employer fails to give a payment or a pay less notice under a construction contract, now it is required to pay the amount stated in the contractor's payment notice. We may just be the application for payment. That's a matter of fact. For some time, there appeared to be a distinction between an interim certificate and the final payment in the final certificate in respect of the ability of the employer in those circumstances to refer a matter to dispute, to adjudication as to the true value of the works. Several cases such as Kelka Projects and Harding Trading, MJ Harding Contractors, held that the employer was able to do so in respect of a final payment, while cases such as the ISG Construction Limited held that it was unable to do so in respect of interim payments. Now, however, in Grove Developments, which was upheld at appeal, it was held that there is no such provision. The employer can adjudicate the true value of the works in respect of either the interim payment or the final payment, notwithstanding its failure to give the required notices once it has paid the notified sum. And this is the rub of it. Once the notified sum has been paid. Now, the subsequent case of M. Davenport Builders confirmed that the requirement for the employer to first pay the notified sum before commencing an adjudication as to the true value of the works applies in the context of the final certificate. However, in Broseley, London, the court held that an employer was not entitled to commence an adjudication to determine the final account in circumstances where it had not already paid the amount stated in the contractor's interim payment application, as an adjudicator had already ordered the employer so to do. Now, I make a specific reference to conscious decision not to investigate. The parties in Leslie Farah construction, and the Leslie versus Farah construction, it concerned a scenario in which there was no agreed final account mechanism. There was no agreed final account mechanism, a final certificate. The parties had entered into an oral agreement to that effect. Then the employer sought to recover overpayments made to the contractor during the works on the grounds of mutual mistake. So if I was to just put some more flesh on the bone here. So during the course of the contract, the employer makes interim payments. But if on final account, the employer finds that it had made payments over and above what it was obliged to pay in the final account, ordinarily, if you recall what I said earlier, the final account shows whether payment is due from or to the contractor. So ordinarily, the employer may well say, I've overpaid you by £200,000. Can I have the money back, please? Now, because they've reached an agreement in this case, albeit an oral agreement, the court held that the recovery was not possible as the employer in this case, depending if this was a fact-specific case, had taken a conscious decision to pay the sums requested by the contractor without any investigation. So the contractor makes an application, the employer pays without investigating the accuracy or the legitimacy of what he was paying. Then he wants to turn around, having reached an agreement on final account, to go back on it. The court said, no, you did not take care originally. So in trying to pull all of this together, and this, I've gone quite rapidly to try and get this as much as possible within 40 minutes so that we leave some opportunity for Q&A. We now know what, in essence, a final account is, what it entails, although we would have known that before we have a better understanding of it. We have an understanding of the legal effect of the final certificate having been issued. We know the provisions that the contracts make and the mechanism for the determination of the final account. And then we know what the common mistakes that are made day in, day out on building sites and how to avoid those mistakes. Now, I need to add here that we are now being regularly asked by employers as well as contractors, and indeed some professional consultants, to actually drop in, review what is happening on their projects, particularly where it is likely, or in fact, it's already become self-evident that a contractor is claiming significantly greater than the contract sum. The objective here is always to be able to, one, identify weaknesses in the process and institute a disciplinary template almost for monthly reporting so that you are able to track all the changes and you don't leave it to the end, both from the employer's point of view and the contractor's point of view. And then taking appropriate strategic steps to secure agreements in sufficient time to ensure that the agreements are dispensed with and formal dispute resolution is avoided wherever possible. It doesn't work in all cases, construction being what it is. Disputes will always arise, but having taken those steps, what it does, it actually puts the party that has actually invested the necessary professional skill and time in good stead in trying to resolve the dispute, either by negotiation or through the formal process of adjudication, arbitration, or indeed by litigation. So we do that review when consultants, employers, and contractors are sufficiently conscious to realize the impact of litigating or adjudicating or arbitrating these matters. So to the extent that anyone is contemplating that, by all means, have no hesitation in contacting our clerking team, and I'm sure a member of our team will only be too glad to give you the appropriate advice, to take the necessary steps, or indeed to give strategic advice as to how to avoid a dispute or resolve them. Now, that is the presentation that I've prepared for you, as delivered in one direction, and we are now open for Q&A. I then repeat the apology. If we were on Zoom, I will see all of you, or as many of you as possible, but as I'm sure as you will appreciate, with well in excess of 850 people in attendance, it is difficult to see all. It's open now. I understand that questions could be put in the chat, and I hope a member of our team will be able to assist me in voicing them so that I can answer to the benefit of all.
Hi, Samuel. Can you hear me?
I can indeed.
Cool. We've got a couple of questions. I'll go to one from LinkedIn, first of all, from Hader. The final case example was presumably several cases of overpayment. Could you shed any further light on this? Did the employer have any record? Could they not substantiate their claim to overrule the oral agreement?
Yeah, the difficulty, just to put it in context, there were several overpayments, or indeed, payments were made in interim valuations. And as everyone would appreciate, an interim valuation payment is a payment on account. A payment on account means that it's adjustable at the end. The significant thing is that an agreement has already been reached with respect to the final account. And then the employer sought to go back on the final account agreement on the basis that he's become aware that the interim payments exceeded the amount that he was due to pay. So I think what I made the observation that it was fact specific. Fact specific in the sense is that when you receive an interim a payment application of £50,000, you pay £50,000 without taking the time to interrogate it to say, it was only £20,000 worth of work that has been done on site. There is no evidence for 50,000. I hereby pay you 20,000 with the relevant notices, which is consistent with what you have done. Now, if you, how do they put it? If you've taken reasonable steps in reasonable time, then the court will be sympathetic. If you have neglected your primary obligation and then left it over time, and then you're seeking the court's, as it were, protection, the court will say that delay defeats equity. And if delay defeats equity and you have delayed, unfortunately, you cannot be helped in those circumstances. And I repeat, that is a fact-specific case. Of course, a properly administered contract will not face such an exposure, in my view. The point here is that the contract administration, from the employer's point of view, fell significantly below the standard that the court would expect. And indeed, these are matters where, when one goes into court, I am sure the contractors' counsel will present chronological, repetitious circumstances and opportunities that the employer would have had to challenge the amount that he was being asked to pay. And they failed to do so. They wait till the end, agree the final account, and then wake up after the event. Of course, he's trying to shut the gates, as it were, after the horses have bolted. The courts will say, I'm afraid I can't help you. I repeat, it's a fact-specific case. I hope that is of assistance to Hader.
Another question, Samuel. One of the things that in a dispute, sorry, let me just read this one out because it's come. This is one of the issues when a dispute arises is both sides or multiple sides start to bring out their various perspectives. As somebody involved in the legal side of this, how do you advise your clients, or how do you calculate the best route forward for your client?
Right, that's a very interesting question. More often than not, I am approached to begin proceedings. In fact, the question you asked me triggers a particular case. I received instructions in chambers to advise on and prepare a claim which the major national contractor thought was worth about £6 million. I had several leverage files, and when I finished my appraisal of the case, my advice to the directors of the company was that if the claim you're anticipating is settled and served, and the employer brings it to me, my counterclaim will be 10 million. Okay, so in this case, you'll be ill-advised to begin proceedings given the facts that I've seen in your own files, let alone what will turn up in the employer's own files. So I settled a piece of advice, which I'm pleased to say enabled the parties in that case to reach an amicable settlement without resorting to formal dispute resolution. And the client and the contractor eventually received just about £4 million in full and final settlement. So I give that as an example because parties, particularly from a contractor's point of view, if you've lost money on a contract, you take the view that the employer must pay it back. But the employer can only pay back if it was the employer's responsibility to pay back. And when you start bringing up your dispute in order to go to battle, stop. Have it appraised professionally. Ask yourself, is the best disposal from my perspective here formal dispute resolution? Would it be litigation? Would it be adjudication? Or could we suit for some sort of negotiation? Often the cost of litigation is prohibitive, it's horrendous. And parties enter litigation without having budgeted to cover the litigation costs. So you never budget for litigation costs, neither do you budget for the litigation time. So the time will have to come off your existing management time, so something else suffers. The cost definitely will have to come out of cash flow because rather unfortunately, the lawyers, they demand to be paid in advance or contemporaneously, and they were never in your budget. So how do I appraise it? I look at it from the perspective that a resolution is always superior. An amicable resolution is always superior to a formal dispute resolution. So one does everything that one can in order to secure resolution amicably. But often, if you leave it to consult counsel when the dispute has broken, to a large extent, you've left yourself very limited room to recover. The prudent ones actually bring counsel in advance before it goes wrong, because sometimes, as they often say, we show force in order not to use it. So if I was the contractor or if I was the employer and I'm showing you what I can hit you with, but saying, well, I don't want to use this force, should we try and negotiate a resolution? Most sensible people will prefer to do so. But then if you've left it to the end, which is the single common mistake that you will find in 90% of the final account of financial disputes that reach the court, is because the final account has been left to the end, mutually, by both the employer and the contractor. And when I say the employer here, I'm referring to the architects, the contract administrators, and the QSs. Now, there ought to be, with every interim payment that is approved, there ought to be an adjustment of the final account, reported, shared, discussed, debated. And where that happens, final accounts often are more easily resolved. I hope that's done justice to that question.
Yeah. It's a little bit provocative, this one, but you may not want to answer this one, Samuel.
I can always take the fifth, although we don't have it in England.
What percentage of cases do you see now where actually the court and adjudication is used as a weapon of negotiation?
Well, you see, adjudication is quite rapid and quite prevalent. Therefore, the parties know that they have to conclude adjudication prior to litigating. I think the matter is, in the main, is the compliance with or challenging of the adjudicator's decision. Because of the perceived informality of adjudication, it is used widely. And that is a good thing that is informal. And it's also a good thing that is used widely. But when parties stop and look at the cost to them of adjudicating, I'm a lawyer, I do this 24/7. I love adjudicating. It pays the lawyer more. But if you look at it from the employer's or the contractor's position, you negotiate a settlement, you save yourself an awful lot. And indeed, you bring expert lawyers in to advise you prior to litigating. It's a stitch in time that saves you 9 down the line. So, although parties will threaten adjudication, it will help them to negotiate a settlement. But once they fire the gun, they go down anyway. They fight. The money is spent by the time they finish the adjudication, which may then go up to litigation following that. If the losing party is unhappy.
Is there a way to assess not just the likelihood of success in terms of fighting on beyond adjudication? Is there a way to assess the likelihood of actually getting what you want in terms of the money that you're looking for? There's obviously, can the party actually pay the bill if you win? But will you win the amount that you want?
First one, I advise all my clients, and I have one now, where the primary issue is to establish that the defendant is bankable. In other words, the defendant is good for the amount that you're about to claim, or indeed that when an order is made, that one will comply with it, and that if they fail to comply with it, then that there is capacity for it to be enforced against their assets. I have been in cases where, indeed, the judgment is secured today, the bank pulls the plug in the paying company tomorrow, and therefore the victory that has been won is a Pyrrhic victory. On the one hand, as such, claimants should always go the extra mile to satisfy themselves before they start incurring significant litigation expenses that can actually be recoverable. I think, is that part one of that question? Is that all of it?
That's part one in terms of if you win, you'll actually get the money. But if you win, will you actually? What's the likelihood of getting them? As in, if I was going to court now and I instructed you and I'm £1 million, I think I'm owed £1 million or I'm due £1 million. How does it work in terms of, can you assess whether the likelihood of getting that money is concrete? Is it 70%? How do you weigh that up?
As counsel, I always assess the prospect of success of claims that are brought to me. So I would always be able to tell my client that it's more likely than not that on the merits, they'll be successful. Now, that is a legal judgment. That's a legal assessment. So the client can proceed with confidence that there is merit in it, because one would have taken original steps to do a detailed assessment and perhaps exchanged a prior letter of claim to which a response has been received. Now, as to whether or not the judgment, once secured in a client's favor, can be enforced, that's a commercial decision. And then there is an extra step that is taken through proper inquiries to ascertain that the person on the receiving end of the judgment, one, is capable of honoring it. And if they choose not to honor it, that they do have assets that can be enforced against. We advise on that, but that is to be separated from the merits of the claim. As to the merits of the claim, based on the evidence, and the operation of the law, I would always advise on the claims that are more likely than not to succeed, and indeed the prospect of success in percentage terms. Now, if you end up securing a £10 million judgment against a company that their credit line is running out and the plug is being pulled on them, that's an entirely different matter. But your separate inquiry as to their bankability as a defendant ought to be able to disclose that and then enable you to make a proper value judgment from a business perspective.
And given your background, QS barrister, QS project manager, I'm gonna you may not want to answer this one as well. Let's say I can win. Will the judge give me the money I want? So I know, well, could I win the case and get less than my £1 million?
Oh yes, there are two things. In every contractual claim, there is the heading of liability, which is the first hurdle you've got to jump. And then the second one is quantum. Quantum is the ascertainment of the exact money that is due. And in the presentation, I referred to specific clauses under the JCT contract, which cites in what circumstances the contract sum can be adjusted and what it can be adjusted for. So yes, if you have an exaggerated assessment of your £1 million, I'm sure the court will very rapidly cut you down to size. But I must say I have received lesser claims, which when I have sat back and reassessed them, the final amount has become significantly more than the claimant had in mind when they approached me. It's a case of being able to, as it were, follow the record of the variations. Of course, variations is a whole subject matter that I deal with in a separate webinar, but is mastery of how to quantify that is key to the amounts that you end up recovering. Sometimes you see a claim that is unsustainable with the amount being sought. You advise the client appropriately. But sometimes you see a claim where, for some reason or another, has been underassessed, and one puts an appropriate assessment onto it to see how that advances in the courts.
And just another one here, it doesn't say the name of this one on YouTube. Variations, if obviously there's been a gap in communication between employer, contractor, and maybe even architect, how would that work itself out in the likelihood of you go beyond adjudication because one party's not happy, we end up in litigation? How would a court try and work out that mess where there's effectively blame on three sides?
The court will apportion the blame. The court's quite comfortable with contributory liability. It was Lord Denning ages ago that decided upon a case where a man with a wooden leg decided to run across an express road. And of course, a car was flying down the road at substantial speed, above the speed limit. The man with one broken leg tried to run, and the bad leg gave way, and he fell, and the car ran him over, ended up damaging his good leg. He sued for his inability to now move, because he could move before, but now he can't move at all. Lord Denning determined the value of that claim, but reduced it on the basis that a reasonable man with a wooden leg ought not to be trying to run across a fast-moving motorway. I give that as an example and fall back to the point that, yes, it is never black and white on a building site. And when variations arise, it could be that the contractor will say that the information was delivered late. By the same token, the architect can say, well, where was your request for this information any sooner? But certain forms of contract provide that the working drawings should have been ready before commencement. So you can see how a set of circumstances could be very skillfully interpreted to place the blame on one side or the other. and to a large extent, in such cases, it often comes down to how razor sharp your advocate is in their assessment of it. I mean, if they've got their feet to the ground and being able to ascertain where it went wrong, that may well be where, as they say, the liability will often stay where it has fallen. But then a wide awake party upon whom he has fallen will say, no, 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 it's not on me. We have to move it back to where it belongs. So it is, again, fact specific in being able to break it down and analyze it. But that can be done very successfully. That has been done in many cases. Excuse me.
Another question. Given the inflation that's going on at the moment, given COVID and the implications of how that changes with self-isolation affecting workforce and all that kind of stuff. So these are probably two separate issues. The COVID and the inflation are probably two separate issues. How in terms of if their impact on cost, how does that translate into the final accounting in terms of inflationary cost pressures and then delays or issues like that related to COVID?
Well, I gave a comprehensive schedule of items that should be covered in the final account in the presentation. What one tries to do is try and fit what has happened under a relevant heading. With respect to inflation, you check and see what fluctuation clause that your contract contains and see how that could be utilized. And more often than not, where items are specified or components are specified in the contract, they're often or similar approved. A well-heeled contractor that is on his game will be able to identify that although this was specified, it's now going to cost £200 an item, whilst I tendered for it at £100 an item. What if I specified an alternative? Now, clearly the contractor is not at liberty to go and make those changes without going back to the employer for approval because it's similar approved. If it is similar approved, you may well save both sides the money by using a similar approved. But often, when a similar approved is advanced, a good architect or contract administrator or QS should ask, what are the cost implications? So insofar as inflation, unfortunately, if you've locked yourself into a contract that is lump sum fixed price without any inflation provisions, you are required to deliver within the price that you've agreed. Now, if it is to do with COVID, of course, there's been exceptional circumstances where one has used COVID, but mind you, the construction industry kept going throughout. COVID has been brought under force majeure. And I say, and where I've advised on COVID issues, except one, which is still outstanding, I try to encourage both parties to see the benefit to them in trying to resolve it than litigating it. And I think we've largely been successful, except one that is still outstanding.
And if somebody was locked into a fixed sum,
lump sum fixed price contract, yes,
and they were facing this issue, is there any remedy for it? Is there any secrets you have, Samuel?
Yeah, golden rule is always common sense. And when that fails, always in any contract that is out there, that it's never black and white. There are issues that fall on the employer's side and there are issues that fall on the contractor's side. Often, what one loses in the swing, one gains in the roundabout. And it would have to depend on how the circumstances have arisen and the magnitude of the amount that is being sought. And of course, the facts as to how then that could be pleaded. And this is where, if one was involved sooner than the dispute breaking out, then you can actually lay the foundation that leads you up to recovery without litigation.
Okay. I think there's one more question, I think, then we'll wrap up because we're a little bit over.
Are we?
So, Samuel, what's the exit point from litigation? Let's say you've got into the case, you've gone beyond adjudication. The case starts to feel a little uncomfortable. It becomes a distraction. Is there a way out at that point? And what would you advise people to do in terms of trying to exit litigation safely?
How do you exit litigation safely? Under the civil procedure rules, you can always serve a notice of discontinuance. But then that is ill-advised, because then you'll end up picking the other party's costs. And with litigation, the costs are an issue. Okay? So parties can choose to mediate, but then again, adjudication largely takes care of that, because adjudication is supposed to be rapid and is supposed to involve lay people. But if we're actually talking about court proceedings, I have known court proceedings midway trial to be compromised and a settlement reached when both sides see what dangers that face them, because sometimes it's so finely and evenly balanced. It is a case of whether the parties are actually seeing reason, seeing the danger to them in continuing, and then choose to pull back. But then again, it's often difficult where one party is keen to pull back and the other isn't. As they say, if you dance with the gorilla, it's not you that determines when the dancing stops. It's the gorilla that does, unfortunately. So I think it has to be. There isn't a general concept that covers all. It has to be specific. No two cases are the same.
But obviously,
same principles may be engaged, but the parties, the facts, the circumstances differ. So it's just one has to look at the facts in order to give appropriate advice.
But the general rule being, if somebody decides to exit the case at that point, it's a signal that perhaps they're not in a very strong position. It's not a great negotiating position for a settlement.
No. Well, the thing is, it's always best to negotiate from a position of strength. But then you will have to set out what that strength is. But if that strength has been assessed by the opposition, I mean, I'm involved in a case which one of my colleagues, who I suspect is in this webinar, we have a trial date. I think it's the 2nd or 3rd of March, and the opposition are behind directions, and they've approached us for an extension of time. We've asked them for reasons for the extension of time. Instead, they've reverted to say that they now want to settle. They have agreed not to pay our costs, but to make what they consider to be a reasonable contribution to it. Now, from where I'm sitting, the next few days will be spent getting into it with them and say, okay, if you want to pull back, we're only a short while away from the court date. We gladly pull back, but on terms that are clearly defined for the benefit of our client. So it does happen.
Cool. That's all the questions, Samuel.
Right. Thank you very much, everyone who's attended today. And I say it's a shame that I can't see you, because we're going on live broadcast. If you was on Zoom, I would be able to see you. But with the numbers, I hope you found it valuable. It will be helpful for you to give us feedback. And of course, we will use your feedback in future webinars. Otherwise, I'm grateful for